Hi guys, welcome to my channel Focus Point with Igor Ryabenkiy. Today we are discussing the hottest topic, how to evaluate a startup. Why is it so important to agree on startup's valuation? It is important for you, for your team, your investors, and moreover, it can be crucial for your future success or failure. So, watch the video to the end. And before we get started, please subscribe to the channel so you don't miss our new videos. You don't want to miss them, do you? Why is the correct valuation so important? It lets you get proper financing and have a proper distribution between the founding team and investors. It lets you plan your future development in the next rounds. It helps you avoid unpleasant situations of down round or situations when it is impossible to attract new money. So, what does the valuation of startup depend on? Team, idea, market, industry, geography, product, traction. The valuation of a startup at early stage is certainly the most difficult task. You don't have a lot of value. It is just a team gathered to make a new project with a possible bright future. There are a few criteria which really help us in this case. How big is the idea? Is it something which creates a new market and has the chance to influence millions of people? Or does it just improve the limited market? The founder and the team. How experienced is the team? What qualities are collected inside the team? What chances does the team have to achieve goals? Traction. Do you have a minimum viable product or just an idea? Maybe you already have a pilot and initial users. Market. How big is your market? Is it something that a lot of people need often or some people need sometimes? Industry. Do you want to improve the industry or revolutionize it? Geography. Are you making the product interesting for a major market or a niche local market? All these criteria are important and may significantly influence your initial valuation. All of this helps us understand the overall potential of the project and what could be optimal investment construction at this stage. It is important to understand what the team can accomplish in the next 18 to 24 months. Smart investors will care about how attractive the project will be in a few years and how it can be valued in the next round of financing. So, how much is a startup worth, you ask? There is no exact answer to how to find the exact valuation. I'll share my approach. Sometimes there is an excellent idea, but the founder lacks significant experience. The product doesn't exist yet, and the team is still being formed. In these cases, the project will have a minimum valuation around $1 million. If the idea is strong and the startup has early traction or strong team, including experienced founders, the valuation may be doubled or even tripled. If the startup has solid initial traction, experienced founders, exceptional idea, the valuation could be doubled again. I use this approach for hundreds of companies in which I invested. Many of them have become successful. Some of them have become superstars, unicorns, and decacorns. Investors always find mature proposals more appealing. When a team has tested their ideas, knows their direction, and achieved product market fit, it is easier to understand how the project will use the investment for success. Imagine you have a great racing car and all it needs to run is a tank of gas. This is exactly how a great startup works, and the gas is the investment. If all it takes to be successful is to put gas in the tank, of course I'm going to do it. I call it the gas tank rule. The last essential aspect that is often overlooked is the investor share. A smart investor will never ask for a substantial part of your company. Don't rush to give away significant shares. Instead, evaluate your interest in the money you want to raise, how helpful the investor may be, and always think about next round of funding. Let's summarize. Factors: team, idea, market, geography, industry, product, traction. When negotiating the deal, don't be stupid, but also don't try to be too smart. Investors and founders sit in the same boat. So if one of them pushes too much at the initial stage, it affects common business. Remember, if the deal is excellent, it is excellent only for one side. We are for good deals, when both startup and investor feel comfortable and achieve success together. My approach will help you make really good deals. Subscribe to the channel and learn from the concentrated experience.